Hey traders, welcome to Charts and Coffee. All right, great to see everybody, and happy Thursday, everyone. We're almost through the week. We've been surviving a pretty bumpy week, so I have a confession to make here as we begin our Charts and Coffee. Today, in my Viking pillage mug, is tea. I know. There might be some tea drinkers out there. Let's chart some tea with Raghee today. Always like to be upfront with you all. Tell me what your favorite tea is. I'm doing an English breakfast tea. Sometimes I'll mix it with a little Earl Grey. Yep, so we're doing a little tea this morning. Great to see everybody. All right, so a couple things to kick off with. I'm going to jump on over to the economic calendar, forexfactory.com. Two calendars are really important this time of year. This one's always important. Forexfactory.com. Click on the calendar tab and just be aware of what we're going to be dealing with. Yesterday, we had an unscheduled FOMC chucklehead. Never fun, market mover, very difficult to prepare for. We want to be at least as prepared as we can be to deal with what those scheduled high volatility hot zones are going to be. Existing home sales at the top of the hour. My day traders, be aware, right at the end of the clearing, we're going to have a little bit of volatility based on home sales. Natty gas traders, I know I've been getting a lot of questions about Natty. We'll talk more about energies in these free videos and in the premium videos, and likely here in Charts and Coffee over the next few weeks. Crude oil has been on a tear. It's parabolic, as are oil stocks. Talked about that in Tuesday's free video right at the Simpler Trading YouTube channel. And we do like the buyable dips in that one. The trends are now confirmed. We have inventories today at 11. So take a look at the calendar. Know that sometimes we're going to get broadsided by some unscheduled event. Usually, commentary about a particular symbol or FOMC members. Never fun, but it's part of the game, right? The next thing is Estimize. All right. I do not use the paid version. You can use the free version. What I recommend everyone do at some point is plug in the stocks that you follow. You're only going to have to do it once. And it's just a really nice way to track what's coming up. And if you follow the 642 pattern I track for the setups into earnings, not for earnings, not during earnings, but in earnings, this is the way that I like to track what's 6 weeks out, what's 4 weeks out, and know when I have that 2-week cutoff. You can check out that particular, I believe it was in the most recent newsletter for countdowntrader.com, but it's at the site. It's been there for about a year, I guess now. So check that out if you know how I play earnings, because I'm not playing earnings now if a stock is inside 2 weeks. Remember, implied volatility favors premium sellers, which I usually am not. Nothing wrong with it, just usually not what I do. So that's what's going on right now. Of course, this show is always about your questions, so let's get to them. Good morning. Great to see you all. Hey there, Les. Thank you for your insights in the currency markets. Of course. They're the biggest markets on the planet, right? There's no market bigger than Forex and no symbol more traded than the euro versus US dollar. My first intro to you was FXCM a long minute ago. That would have been probably 2006, perhaps. It's been a while. I had no idea how much I should have paid attention to me back then. Les, here's what's so cool. And thank you. You're very, very kind. You know what's cool? If you go back and look at my work, whether I was writing for my own website, writing for sites like back in the day, trading markets, or doing work for companies like FXCM or Interbank FX or even TradeStation. I was their chief currency analyst for a while. You'll see I've been using the same stuff. So if you paid attention to me then, if you're paying attention to me now, I'm using what's tried and true. So great to have you back. And yeah, very cool. You've been looking at these markets a while. That's very cool. All right, Megazord, good morning. I am eyeing Ford here. All right, let's go take a look at Ford. with its dip into the wave, absolutely. What do you think about scaling into some calls? I love the word scaling. Absolutely. We don't just push in. We don't push all our chips on the table at once. We scale in. I love it. Or should I wait for more strength? So here's where I would look at this. Ford is not a structural problem. In other words, I don't have any issue with the weakness because it did not disrupt the uptrend. We have no problem with the uptrend here at all. And what do I mean by that? Well, we're going by the hang on one sec. Sorry, I don't know if it's acting up. I'm trying to get my drawing tools here. There we go. Okay. See here, green over green, and I have the label here reminding me that's the same information, right? Green over green. So my 8, 13, 21 and my wave, which is the 34. So those are bullish. This pullback did not disrupt our structure. Awesome. So we have a trend. We have a trend. Cool. All I need is the wave, really. Wave, maybe some volume ledges, some Darvis support and resistance, etc. One interesting thing we have in this situation is a gap. Take a look here, right? This area here is a gap. And so I think in that area, I also have the beginning of a Darvis 3.0 signal starting. What the issue here was the volatility. So what I'm looking for is today, give me a minor low or an inside day. All that is a smaller candle. What do I mean by that? I want to see a candle that looks something like that, right? Or I want to see a candle that looks something like this. That's going to be Ford showing me it's tapping the brakes. Now, if you're comfortable scaling into Ford here, make it an aggro scaling. What do I mean by that? Make it maybe a quarter, a third of your budget. So you still have another 3/4 or 2/3 left if we make lower lows. This zone extends all the way down to at least the middle line of the wave, if not the 55 propulsion, the 55 EMA. So I don't think you need to wait for more strength. Ford's been a relative outperformer. We like the structure. Green over green, still well above the mean on the V-score. I mean, we're not even pulling back to a level of issue, any kind of issue. I don't mind if we pull back to, say, a 1.6 standard deviation. That should be no problem at all. So I'm with you on Ford. Some of the folks in the Mastery grabbed Ford back when we did this. Right. That's the great thing about the community in the Mastery, the Sector Secrets Mastery. They were talking amongst each other. They said green over green, blue grab candles in the wave, and they bought that. And I say they because I was doing something else, putting on another trade. The community saw the setup and pointed it out. How cool is that? You know, that just makes me so happy. All right, Jimmy, how are you? NQ has more than 8 red candles. But the JT multi is still red yellow. Is the NQ still in chop and not bearish? So let's talk about what the NQ is doing. And we're going to go right back to that JT multi. So again, let's take a look at the structure. We're still yellow on the lower, but we are bearish in the momentum. 8, 13, 21. We do have bearish momentum. No question about it. Let's talk about a very important level. And that is, you'll see this sneaking right up in here, those white dots. That is how I replace exponential moving averages on my chart with a tool called Simpler Propulsion. It is the cross of the 8 exponential moving average higher through the 200 exponential, and it interacts with price in a specific way, turns the dots on, just lights them up. That tells me the 200 is in play. So the 200 exponential, and I would say even the simple, think of it as the equator separating the northern from the southern hemisphere. In this case, it's the bullish from the bearish hemisphere. We're still in the bullish hemisphere, gang. There is a wider opinion of bullishness in any market if it's still north of that 200. All right. So that's where I say I'm still bullish, but the structure is still neutral, yellow. So I'm going to still look for an opportunity to get long. That's the only thing I can do in this environment. So yes, lots of weakness within the context of this range. How am I going to define this range? Well, That 200 is going to be part of it. But then I also have, take a look, automated Darvis. Look at that coming right in there. Beautiful, right? Automated Darvis coming right in there. Again, you can download that Darvis right from countdowntrader.com. That is Simpler's free automated support and resistance tool. It's a modernization. We call it 2.0. It's a modernization of a time-tested automated support and resistance process, first created by Nicholas Darvis, and a little bit of a humble brag, perfected by Simpler Trading. And so I love this tool. I love that we've been making this free since 2017, 16 maybe. And it's something that, we feel is going to help traders, especially new traders. Look, what's so intimidating in the beginning of our learning process? How do we know what the underlying trend is? Up, down, sideways, choppy. Where's the support and resistance? By automating it, we're able to quicken the learning curve, right? So as long as I'm in that range, does everyone see that there? Neutral market, Darvis defined range. And then you know what I'm going to do. We've been talking about this since 2018. I'm going to throw a slow stochastic up here, right? Or ready, aim, fire, which is brilliant. A lot of folks have asked me, Rog, do you use a ready, aim, fire? Luckily I'm in the room with Mr. David Starr himself. And if there is a voodoo line or ready, aim, fire, I'm made aware of it. I'm used to looking at this. This is what I've been using since I was a teenager, right? It's an old school tool. So what we're able to do is, combine sort of old school stuff with some of the premium, really premium and elite type choppy tools. So whichever you have, if you don't have ready and fire, this is a good alternative. But if you trade chop, do consider it. So here we have the market getting down into that zone below the 20, right? I don't know that we're going to necessarily get a signal of the cross, right, on this, but knowing that we are at or below the 20 in and of itself is a cue. And then one of the things that I do, and it's kind of hard to see here, I'll make this a little bit thicker so you can see this, because on your end, it might be a little thinner. But one of the things that I like to do is keep both the D and the D2. And I know this is kind of inside baseball, but this is all within the free. You can plug this into the free tool on toss. See how it's going green? See how that more aggressive is going green? That's your heads up. That's almost like a shot across the bow. That's how I'm looking at it, Jimmy. And if you haven't checked out the free video from yesterday, Jimmy, I think you're really going to benefit. Where the heck is that free video? So if you go to YouTube, where you are right now, right? You go to YouTube, head on over to the Simpler Trading channel. We have so much great content from so many of our traders here. Henry and Bruce had 2 awesome updates. Check them out. I'm a huge Bruce fan. I think Henry hung the moon. So do check that out. But right here, I have are we in a downtrend or oversold market? I think you're going to like that a lot. So I'll push this through into the room there, our little chat. Check that out. I think you're going to find that super, super helpful. All right. Okay, moving on. Thank you for the question. Thank you, Tony. Love the CNC. Today is CNC and tea. Yeah, I made a huge confession this morning. Today, yes, we got some English breakfast tea going on in the giant Viking mug. So I always keep it real with y'all. Okay. Tea, a little bit of cream, and a dash of cinnamon, actually. All right. So what can price action between 7 and 9 a.m. tell us about the day ahead? Tony, I think that pre-market levels, when they are associated with volume, are important. So I'm going to lean a little bit on the volume and market profile type approach, which I'm absolutely influenced by. So I'm going to lean on that a little bit. So if you have levels that have volume, I would keep an eye on that. See what kind of trend we're inheriting, not only between 7 and 9, but what happened at the 4 a.m. Asian close? What happened in that 3-hour gap between 4 and 7 a.m.? And then 7 a.m. is sort of the first cup of coffee. We see volatility increase. We see volume increase a little bit compared to the 3 hours prior. What kind of trend do we seem to be inheriting from 7 a.m. Forward, right? And here you can see it. Do we have any 8:30 economic events? So you can see that's what I'll take away from that. But mostly volume is what I'll key in on. So thank you very much for the question. All right. Moving on then to Ron, David. Oh my gosh, we have some coffee fans. Like tea, not green tea. Yeah, green tea is great though. I do love green tea sometimes in the afternoon or evening. Yeah, I have a nice jasmine or mint green. Oh yeah. I'm not too snobbish. I'm not too snobbish about what goes in the giant mug, as long as there's some caffeine, right? Okay, so next up, Nis asks, "Thank you for all the." Oh, my pleasure and my job, right? This is my life's work, and I've been working on this trading game for over 30 years. It is my life's work, and I'm honored to be able to share it with you all. Can I have a look at Apple? Sure. Looking for a minor low before going long. Yeah, absolutely. Is this a choppy market? Take a look. Absolutely. Yellow lower, bearish momentum, right? Bearish momentum, we can see that, but neutral market. And our minor low is actually coming after a nice drop. We actually like to see a drop of about, 3 to 8 candles, maybe 10 candles. At least there's a reason for the market to maybe make a directional shift. Here's your lower low, right? Here's your lower low. And then today we need to have a higher low and take out the high from yesterday. So I'll be keyed in on, I agree, I'll be keyed in on 171.10, 171.20. But let's also think about, well, let's go back to Darvis, right? Boom, look at that. Look at that. Now, all of these, I'm going to stretch all of these across. All of these would have gotten our attention. All I'm doing is taking what's already automated and drawn on our Simpler Darvis 2.0, available over at countdowntrader.com, extending those over. And I want a noisy chart, right? Any noisier than, let's face it, I got a lot going on my chart. I fully admit that. But everything is telling me something about the nature of price action. So there's my zone, right? It's not just a single magical unicorn of a level. It's a zone. Then we can be a little bit more discerning in the zone. As long as you can stay above that, about where we are right now. I think we really need to stay above a +1 standard deviation to say we're still kind of bullish. So that's what the V score is telling me. And then neutral on our JT multi, as we can tell there. And then finally, I don't have a green yet, but we definitely are at the lower end of the range, which is what's so important, right? With the lower end of the range, at least now we can start discussing this being oversold, right? So this is the 20 reading on the slow stochastic. Okay. All right. So that's the way I look at this. I'm with you. I'm with you. All right. Next up is Puer. Puer is great, Tim. And gunpowder green. I'm not familiar with that one, Steve, but it already sounds interesting to me. It already sounds good. Michael says cream and sugar. I do a little honey. I do a little wildflower wild honey. But absolutely. Caffeine is good. Doesn't matter where you get it. I'm with you, my friend. That's fantastic. All right. So next up, am I ready for the return of billions? Donald, Axe is out of the show now. Axe is in what, Switzerland? And it's really going to be about Mike Prince. And yeah, I'm always, absolutely. Can't wait, Donald. All right. Hoogly Poogly. I'm a member of your Sector Secrets Mastery. Well, I thank you. I just took your ultimate day trading class. All right. The day trading class from 2021. Again, I thank you. Do I day trade in the futures room or are they more swing trades? In the futures room, I focus on futures as much as I can. In the mastery, I focus on everything that I do. Mastery is mostly a group of traders that focus on options, right? So we day trade options in there. We, as you said, swing trade or overnight trade. Let's just use that jargon. We overnight trade in the mastery, but I do both in the mastery, but the emphasis is options. It might be stock options, ETF options. It could be index options. So I hope that helps. But if you have any questions specifically, you can reach out to the office but I hope that helps. They can help you understand a little bit more, but it really is a division of asset classes, right? I try to do all my futures trading in the futures room. Of course, futures are going to, tip into a conversation about equities and sectors anyways in the mastery, but that's the way I do it. All right. And I'm in that mastery, in the chat with everybody, 5 days a week. All right. Good morning. Can we take a look at KRE? Heck yeah. I love KRE. Talk about a relative outperformer. This is an uptrend pulling back. So let's start with the structure here. Beautiful green over green. Look at that. Awesome. This is the kind of market where buy the dip is not a meme. It's valid, right? Still well above the mean of the B score. So still on the bullish side of things. Excellent. So that's a volume type analysis of, hey, did that or these two down candles really disrupt the bullishness or not? Not at all. So the main issue I have is kind of the same issue I have earlier with Ford. It's not that it's pulled back and I don't like this. It's the size of the candle, which really would merit waiting for a pause candle or a minor low. And we still haven't quite touched the 21. We're not quite there. So is this a dip? Yes, it's in the wave. So really from about 75.25 to, I'd say easily 73.85. That's a very nice zone. I like KRE. And then let's also think about this technical trend in the backdrop of the macro trend. Oh my gosh, it's 9:22. All right, this will be the last question, and I'm going to move on into the futures room. Let's think about the backdrop. We have a macroeconomic trend that favors regional banks. It favors financials too, but it does favor regional banks, as does a strong US dollar. All right, as always, gang, thank you so much for being here. I see a lot of questions I did not get to. Feel free to leave them down in the comments. I'll circle back around, and I will see you all tomorrow, same time, same station. Check out those free videos. I think a lot of you will find yesterday's free video very, very helpful. Be good to each other, gang. I'll talk with you soon.